We're looking for Christmas in July for a lot of investors out there, and that's when a lot of these big tech companies are certainly going to be reporting as well. Let's end with some actionable advice for investors out there. Of course, they're not trying to fight the Fed, but they are trying to anticipate the Fed. What words of wisdom would you bestow upon them?
I wouldn't overdo the Fed. I mean, a quarter point cut in September or November doesn't really mean anything to NVIDIA or Microsoft or Apple. I think you should get a shopping list together. You really can't buy here all in, last 9 days setting records. But you could put together and say, wait a second, I want to find those companies that are going to beat, estimates. They're going to raise guidance, and over time, you're going to see those analyst upgrades. So stay away from those companies that look tempting. In this earnings season, we're going to have Russian roulette. There's going to be some companies down 20%. Stay away from those. It's quicksand, because most likely those companies missed estimates and they're guiding lower. So I guess, to your viewing audience, find those companies that they're going to beat and raise guidance, and you'll probably be rewarded. Definitely stay away from quicksand.
What is this, and I'll throw one bonus one at you. What does this earnings season mean for companies that are so detached from fundamentals that they've essentially ended up in this bucket of the meme trade?
There's been a lot of talk about Tesla. We kind of like the Magnificent Seven minus Tesla. Again, we just find Elon Musk very erratic. Love what he does, scientist, doc, and Back to the Future type of guy. But this company's lowering prices. If you look in the video, they can raise prices, and Microsoft and some of these other companies, Costco this morning, raising their membership, as you covered. But when you kind of look at Tesla, they've been lowering prices, and we don't like that. So that stock has gone up, 100 points in the last few weeks. I think ahead of fundamentals, considering they're lowering prices. So that, to me, is, again, I wouldn't go near a GameStop, AMC. That's been a long time talking about those type of things, soaring kitty and all that stuff. But right now, Tesla's starting to look like a mainstream type of meme, so to speak, because of this huge run it's had, maybe fueled by short covering initially. And maybe we're wrong. Maybe the sum of the parts are greater than the whole, and that's why it's trading like that. But I suspect it's a little bit more than that. So I'd be careful buying Tesla at these levels.
Yeah, roaring kitty. I'll just correct that for the transcript. No shade to you at all, Ken. I just want to get it right for the folks that are doing
What did I say?
Some SEO. Soaring kitty. It was very close. Really only like two letters away on the QWERTY keyboard here. So.
Well, that's a big difference, soaring versus roaring, I guess,
There you go. Ken, great to see you. Thanks so much for joining us. Absolutely. Ken Mahoney, who's the Mahoney Asset Management CEO. Appreciate it, Ken.
Right, thank you, Brad.